Hi, in this video, what we'll do is we will provide you an overview of financial modeling. We try to do it in our lecture with respect to financial forecasting, but that's the more academic treatment or the treatment that is in your books. Here, we'll try to give you an overview of how it's done in the real world, meaning how to create financial models as created in corporations or in projects. And hopefully this will give you a better idea of how to construct a long-term financial model. So let's have this example. Cocoa Oil Company is asking you to construct its 25-year financial model or financial plan. So you have to make a financial model depicting the income statement, statement of changes in equity, balance sheet and cash flows of this company for the next 25 years. Okay. So Cocoa Oil Company will submit this model to banks to obtain a loan. And Cocoa Oil will build a manufacturing facility over 3 years. So may bubuin silang planta over 3 years. And then after those 3 years, they'll be in operation for the remaining 22 years. So kaya 25 years yung financial model. Now the forecasts for sales, OPEX, and PPE are in the assumptions page. So you have here in your financial model an assumptions page, and I'll walk you through the assumptions later. Okay. Other operational assumptions are also provided in the assumption sheet. And then the company already talked to banks. The bank has indicated that it can only loan out a maximum of 700 million for your manufacturing facility. So nag-usap na kayo ng bank, the bank said, I can only lend 700 million. So the rest, ikaw na yung magpondo using equity, right? Now the question is, you have to determine how much equity shall be required to make sure that the business is viable. So in other words, we know that we have a fixed loan amount of 700 million, and it's going to be used for construction purposes, right? Now the question is, how much money should you further invest into this business, okay, as equity para mabuo yung financial viability of this business, okay? So now let's go through the assumptions. So you're given the assumptions in the assumption page, okay? So here you're given the unit sold. Let me enlarge it a little, okay? Here it's the unit sold. So sabi sa'yo in millions. So starting year 4, you're able to sell 12.67 million coconut oil products, after opening. And there's already a revenue forecast provided to you, or at least units sold, until 2025. So that's 51 million, 51.75 million units sold by 2025. Okay. Also here, you're already provided the operating expenses. You're provided cost of goods sold, power, chemicals, sludge, salaries, expenses, overhead, contractual services, and repairs and maintenance. Okay, so it's already provided to you. However, what was mentioned here, which is very important, is that there is no inflation currently. So therefore, these forecasts, these numbers uses 2021 prices. So ibig sabihin, we still need to apply inflation to these numbers. Okay? So we'll apply that later. The total PPE or capital expenditures that's supposed to be spent is 49.83 million, in the first year, 626, 616. So in total, 1.29 billion pesos of capital expenditures will be spent. Okay? So yan yung revenue, expenses, and costs that we need to take into consideration in our forecast. Okay? Let us now proceed to other assumptions. So you are given the price per unit, 10 pesos daw siya per unit in 2021. And then the selling price will increase, the selling price will increase by 3%, for the next year or every year, until the end. Okay? The costs need to be inflated 3% for every year. So yan yung parang cost inflation kasi syempre the costs in year 2 is lower than year 3 because of general inflation. And then you're given administrative costs. Ang admin cost daw is 5% of sales in their estimation. Okay? Management fees are 2% of sales based on their estimation. Okay? The tax rate is 25%, so we'll apply that later. And then the interest expense is 10%, so that's the interest rate. The loan is going to be repaid over 10 years. Okay, so yung loan natin na 700 million, ang repayment niya over 10 years. So that's 70 million per year. Okay. You're also given some operating assumptions. What are your operating assumptions? Days receivable is 60 days. Inventory receivable is 30 days. Days payable is 45 days. And target cash balance is 180 days. You're also given the base. So 60 days of sales, 30 days of cost of goods sold, 45 days of cost of goods sold, and 180 days of total OPEX. Okay. So those are the assumptions of the financial forecast that we have to do. Okay. So if you notice, one of the financial modeling techniques that I employ here, or not techniques, but financial modeling norms, is yung blue font versus the black font. No? This is my personal style. No? Lahat ng blue font, lahat yan ay hard-coded numbers. Ano ibig sabihin ng hard-coded numbers? Hard-coded numbers are numbers which you input directly. Okay? So I usually designate them as blue. Right? Why do I designate them as blue? So that I know kung may hard-coded ba or wala. Okay? At lahat ng calculations, meaning there are formulas, lahat ng naka-formula, black yan. For example, here, sum. No? The usual font color that I use is black. Okay? Pag naka-input siya directly, for example, yan, naka-input, di ba? Hindi sila lahat naka-formula. Okay? Ito. No? I usually use blue as the basis or as the font. Okay? So let's now go to the third tab, which is the model blank. So here I've already set it up on how to do it. Okay. Now, how do I usually set it up? Set a financial model up. First, we start with the schedules. Ano yung schedules? Yung schedules, yun yung mga kailangang i-compute na items. Right? So usually yun ang schedules. So before mabuo yung bawat item ng financial statements, may mga kailangan i-compute for those items. Right? So usually, I separate it on the top and compute it separately. Okay? So here, in terms of schedules, one schedule is total revenues, right? Because of course, you have to have a price forecast and a volume forecast. When you multiply the two, then you get revenues. Okay? Another thing that you need to compute separately is depreciation, right? Because you have to compute depreciation so that you can get PPE ending. Okay? So yun na lang muna for now. Okay, so that's the first part. Once I have already computed the schedules, the second part is to do the financial forecast already, right? Specifically by doing the income statement first. Okay? And later, maintindihan mo na may mga iba-blank muna tayo dyan kasi hindi pa natin alam. Okay? And then later, it will all come together. Right? Until you arrive at net income. After you arrive at net income, what is the next step? Punta ka na sa statement of changes in retained earnings. The objective here is to compute the RE ending. Okay? So meron kang RE beginning, meron ka ng net income. So dadalhin mo lang siya doon. Right? Wala ka pang dividends, pero later meron tayong connection mamaya on how to compute the dividends, and then you can compute the retained earnings ending. Once you compute the retained earnings ending, it connects to your balance sheet, of course. So yung output mo dito sa income statement, it connects sa statement of changes in retained earnings. Okay? Yung output ng statement of changes in retained earnings, pupunta yan sa balance sheet. Okay? After the statement of retained earnings, computin na natin yung balance sheet. So may cash, receivables until you get total assets, payables, blah, 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 until you get total liabilities and equity. Okay? Ngayon, at this point, hindi pa balance yan, right? Kasi kailangan yung kumonek sa statement of cash flows. So we compute the statement of cash flows. And then the last step is marirealize mo, after mo buuin yung balance sheet, income statement, and statement of cash flows, marirealize mo na yung cash balance magiging negative. Bakit siya magiging negative? Kasi hindi pa natin pinag-aralan yung equity and debt components. So sa dulo, tsaka natin ilalagay the financing analysis. How will you finance it? Debt ba or equity? Okay? So if debt, we will compute the repayment, and then you will compute the debt ending balance and the interest expense. Right? So pag nagawa na natin yan, the last step is to compute the computation ng dividends. So I'll discuss this later. Yung tinatawag nating dividends cash sweep, no? Na logic. Okay? And then afterwards, pag nabuo mo na yung FS, pwede mo na siyang gawa ng financial ratio analysis. Okay? To analyze anong nangyari sa financial forecast mo. Okay? Now, let's now do it. No, the first step, compute revenues first. Okay? So how do you do this? I-connect mo siya sa assumptions, right? You know the unit sold. How much is the unit sold? Let's connect it to the assumption sheet. 0 siya ng 2021, right? And then copy mo lang hanggang 2025, right? So if you notice, the font color that I'm using is green. What does green mean? It reminds me that this cell, the computations in this cell, links to another sheet. Okay? So yung black, computations in the same sheet. Yung green, it reminds me, no, na yung computation dito galing sa ibang sheet. So I have to be careful. Okay? So first, yun muna, unit sold, right? So yan, nalagay mo na for every year. Next, price. Okay? You know the price in 2021, right? The price in 2021 is given here, 10 pesos. Okay? However, hindi mo alam yung price of 2022. Why? You still have to apply inflation. How do you apply inflation? The prior year times 1 plus inflation gives you the current year prices. Right? So let's apply it. Okay, prior year, right, times 1 plus inflation. And the inflation of cost of price is 3% according to this one. Okay? So yan. Okay? 10.3 na yung magiging price. So gawin natin 2 decimal places. 10.30. Okay? Now, there's a trick in Excel. I don't know if you know it, no? Pag nilang, di ba ito, assumptions G22, pag ginawa mo siyang $G, $22, okay? Lagyan natin ng dollar signs. $G, $22. Ang nangyayari is na-fix yung itong portion na to becomes fixed. Okay? So pag dinrag ko siya dito, kinapi-paste kong ganyan. Okay? Napansin nyo, hindi nababago yung assumptions G22. Right? Pag hindi ko nilagyan ng dollar signs, mag-move din yan. At mag-error yung formula ko. Diba? Kasi nag-move din yung assumption cell. Eh dito naman sa assumption cell natin, wala namang N22 eh. Right? 0 siya. Diba? So, for us to be able to fix it, you need to have dollar signs sa G and sa 22. Kung ano yung nilagyan mo ng dollar signs, yun ang nafi-fix. So in this case, nilagyan ko ng dollar sign yung G. So the column is fixed. Okay. And then nilagyan ko ng dollar sign yung 22, which means the row is fixed. Okay? So let's correct this. So dapat ganyan siya. So here is my price forecast. Okay? So if you look at my formula, prior year times 1 plus inflation. So prior year times 1 plus inflation. Okay? So yan ang ating ginagawa. Okay? Now you can get revenues na. 0 times price. Ay, sorry. May mali ako. Okay, the price should be not in year 2021 pala, but price in year 2024. Right? Yun ang sabi ko kanina. This price is as of year 2024. So, delete natin to. Okay? Right? Kasi wala pa talagang revenues sa years 1 to 3 kasi under construction pa lang. Right? So, na-move lang siya. So, ganun pa rin. If you look at the numbers here. Prior year times 1 plus 1 plus 1 plus inflation. Okay? So yan na, okay na. Next, we compute for depreciation. We need to link this first to how much our capex is. So based on assumptions, ang capex natin is this one. 2021, 2022, and 2023. Right? Lakihan nga natin ang konti. Okay, 2021, 22, 2023. 2024, zero na yan. So even if I drag this, zero naman ang lalabas eh. Wala na kasi akong ibang capex. Yun lang. Okay? Now, how much is depreciation? So, let's assume that the depreciation is the remaining life of the project. So, how do you compute depreciation? The cost over useful life, right? How much is the cost? The total cost is, yung sum nitong tatlo, right? That's the total cost, right? Divided by useful life. What is the useful life? Now, the useful life is kung 25 years yung buong proyekto, right? Tapos 3 years ang construction, ibig sabihin 22 years ang useful life. So let's divide it by 22. Here, I'll mark this blue. Why will I mark this? I'll mark this blue. Why will I mark this blue? Because I have meron akong hinard code, which is 22. So it reminds me, that there's a hard-coded number. Okay? Pero itong next, black na yan. Kasi formula na lang yan eh. Right? So let's copy it until the end. So that's the depreciation every year until 2025. What is our test? Our test is dapat ang ending balance ng PPE sa dulo, 0. Right? So what is the beginning balance ng first year? 0. Capital expenditures, ito yung additions to PPE. Depreciation, so we can have it there, no? So ang ending balance is PPE beginning plus additional capital expenditures minus PPE ending. Okay? Pag ito dinrag ko hanggang dulo, well, okay, pag ito dinrag ko hanggang dulo, 0 dapat. And that's what happened. No, my ending balance is 0. Okay? So let's try to start the income statement. First, revenues. We know that already. It's here. Right? That's our total revenue forecast. So let's just copy it. Okay. Cost of goods sold. We don't have cost of goods sold yet. So let's try to get it, no? Ngayon, yung cost of goods sold, ang sabi sa'yo, it is in real prices. Okay? So here is our cost of goods sold. This is daw in real prices, real inflation as of 2021. So, yung 12.38 ang prices niya as of 2021. Right? So therefore, yung 12.38 na yan, pag in-spend mo yan sa 2024, it should have inflated. Right? It should have inflated, right? Since it should have inflated by how many years? It should have inflated by 1, 2, 3, 4 years, right? So that it will be attuned to what is the inflated prices by 2024. Let's look at this number. This number is the amount that will be spent for cost of goods sold. No? However, it uses 2021 prices. So for it to be attuned to whatever is the actual prices in 2026, it needs to be inflated by 1, 2, 3, 4, 5, 6 years. Okay? Right? So para kinukuha natin yung future value ng mga ito. Kasi lahat ng mga ito ay prices as of 2021. And how do you do that? You do that kung ano yung 2021 prices times 1 plus the inflation rate raised to n. Right? N here refers to the number of years of inflation needed. Right? So, for the 2024, paano siya dapat ma-inflate? So 12.38, no, times 1 plus inflation, in this case 3%, right? Raised to time. How long is the time inflation? 2021, 2022, 2023, 2024. So 4 years raised to 4. Okay? Kunin natin to for example. So this is 21.38, yun ang cost of goods sold, times 1 plus 3%, raised to how many years? 1, 2, 3, 4, 5, 6, 7. So raised to 7. So that's how we compute the prices in nominal amounts. Okay? Let's try to model that in. Okay? So if you look at the model blank, no? Cost of goods sold. Okay? So para siyang kung ano man yung cost of goods sold, okay? Times 1 plus the inflation. In this case, cost inflation is 3%. Fix mo ulit. Okay? Raised to a number. We want that number to be a dynamic number. So usually dito ko siya tinatag sa taas. Okay? Right? Bakit sa taas? Kasi nandiyan naman yung 1, 2, 3, 4, 5, 6, 7, 8. It's there for a reason. So if I need to denote a year, for example, then yan ang ginagamit kong cell. Okay? Okay? So ayan. Okay? Zero kasi zero yung cost of goods sold natin. But if you move, for example, here, 13.9. So, ano nangyari dyan? Okay? That is assumption J8. Okay, J8. So, 12.38. Yun yung J8. Okay? Times 1 plus inflation. Okay? Right? Raised to J1, which is 4. And then if I move J1, I move this, J1 nagiging J2. J1 nagiging K1. Nagiging L. So namumove rin yung exponent. Right? Let me just check if my grouping symbols are correct. Dapat, I don't know if it will matter. Yan. Tama naman. Walang change. So we can copy it until the end. So yan na yung cost of goods sold natin. How much is gross profit? Aha, the revenues minus cost of goods sold. Then you can copy the whole thing. Meron ka ng gross profit. Next, expenses. Itong mga expenses na to, kung tutusin, pare-pareho lang sila ng gagawin. Right? Kapareho sila ng cost of goods sold. Right? You have the expense here. Okay? Times 1 plus inflation, which is this one. Fix mo ulit. Oops. Ulitin natin. Power times 1 plus inflation. Here's our inflation, 3%. I-fix uli natin. Okay. Raised to the first power. Okay. So there. Sorry, this should be G9. The first power. Okay. Now, may gagawin ako magic. Pare-pareho lang yung formula ng power chemical sludge, di ba? Ang gagawin ko magic, lalagyan ko ng tawag dyan, lalagyan ko ng dollar sign yung row 1. What does it mean? It means I'm fixing the rows, right? But I'm allowing columns to move. Right? So let's see. Pag minove ko siya dito sa next, ano nangyari? From G1 to H1. Okay? So, copy natin hanggang dulo. So, na-compute na yung power costs. Okay? Hanggang 2045. Okay? See what happens when I copy it pababa. Okay? Una, nagbago to. Assumptions G9, bumaba to G10, which is correct because in our assumptions page, G9 to G10 din yan, yung power and chemicals. Right? So, okay lang yon. Nagbago ba yung inflation? This one? Hindi, kasi finix natin pareho. Nagbago ba yung row? Hindi, kasi naka-fix yung row. First row pa rin. Pero pag minove ko siya dito sa kabila, nag-move yung column. Okay, so it's a financial modeling, I guess, Excel technique. No? And from there, I can copy na hanggang repairs and maintenance. And my formula will be correct. Okay? So yan. Tapos. Okay? Again, it's green because it has a connection in the assumptions page. So green siya para alam ko nakakonect siya sa ibang sheet. Okay? Next, management fees and general admin. Sabi, ang admin expenses daw is according to our assumptions, admin cost is 5% of sales. So 5%, i-fix uli natin. Lagyan uli natin ng dollar sign, no? Times the sales for that year. So the sales is here, right? So yan, computed na siya dyan. If you want, you can opt to not change the row so that it's safe. Okay. Management fees, sabi, is 2% of sales, right? So fix it also times sales. And then you can also opt to fix the rows. Okay. And then you can copy it until the end. So yan na yung general admin expenses and management fees. You can now compute the Ebitda. Okay? How much is the Ebitda? Okay, yung OPEX, pwede pala natin gawa ng subtotal here. So here is total OPEX. Okay? Again, it's black. All calculations are on the same sheet. Okay? How much is Ebitda? That's gross profit minus OPEX. So that's our Ebitda for the year. And when you drag it, that's the Ebitda for every year. Okay? What is depreciation? Nandun sa taas. We computed it already. It's this row. No? And we can copy it until the end. How much is EBIT? The Ebitda minus depreciation. How much is interest expense? Mamaya natin kakalculate yan. Okay? Let's assume 0 first. Okay? EBT is EBIT minus interest. Okay, so for now, equal muna sila. Kasi maya pa natin isisingit yung interest expense. Okay? Taxes, we can sort of model that already even though mali pa yung number. Bakit mali pa yung number? Kasi wala pa tayong interest expense. Pero we can start including that in the calculations na. Now, how do you compute taxes? Okay? If it is a net loss, no taxes to be paid. In fact, you have a tax benefit. Okay? If it is a net income, you pay taxes. So if that is the case, if the EBT is negative, the tax here should be positive because you have some form of tax benefits. Okay? It's a simplified modeling tool. Later on, when you study it in higher accounting, you'll know that taxes is much more complicated than this. Okay? So later nyo na lang i-model ng precisely yung taxes. For now, let's simplify it. Okay? If that is the case, the taxes here as computed will be the EBIT times the tax rate. Okay? 25%. And you want to fix that also. And then to compute the net income, the EBT minus the tax. Okay, and then copy it until the end. So yan, may net income ka na. Okay? May net income ka na. Dahil may net income ka na, tapos ka na sa income statement. Well, technically hindi pa kasi tandaan mo na yung interest expense mo hindi pa tapos. Iko-connect pa natin siya later. Pero okay lang kasi maglagay ka ng kahit anong number, 1. Maglagay ka ng kahit anong number, 1, 1, 1, 1, 1, 1. You know na ika-calculate na siya automatically ng model mo. Okay? So, let's delete it first. Now, let's go to the balance sheet, which is statement of changes in retained earnings pala. Okay? So, sa 2020, so, ang net income, kukonect mo lang dun. Right? Ang dividends, blank muna. Ang retained earnings, ending at the beginning, plus net income minus dividends. Okay? So the retained earnings beginning of 2023 is the ending of the previous year. Itong net income, pwede mo nang kopyahin dyan kasi ayun no. Nandun naman yun, naka-connect na yun. And then ito, pwede mo nang kopyahin dyan. So you can now copy this for the whole, for all years, and then you have retained earnings ending. Okay, oops, sorry. Dito pala siya dapat nag-umpisa. Oops, oops. Oops, diba yan? Yan. Okay. 2021 up to 2025. Okay. There you have our retained earnings na. Ending. Next, we start with the balance sheet. Sa balance sheet, in financial modeling, ang huling matatapos cash. Kasi i-connect natin to sa statement of cash flows. Doon siya nakakonect. Kukumputin muna natin yung statement of cash flows bago makuha yung cash. So, blank muna yan. Okay? Let's go to the other items. Receivables, we know how to do that. Right? Where is our receivables? Edi, you know that you know your revenues. Ito, right? Right? And then you want to get 365 days, di ba? 60 days worth of, kasi sabi sa assumptions natin, our receivables is 60% of sales, 60 days of sales. Okay? So we need to get how much is that? Okay? So para malaman natin yun, kailangan nating malaman yung daily sales. So receivables is this one, revenues divided by 365, right? Times 60 days. And that's your receivable balance. This one, I'll color it blue because I encoded 365. Okay? Actually, pwede nating ilagay dito sa assumptions yan. Days in a year. Para maging green din siya kung OC kayo. Para i-divide natin siya sa assumptions na 365. I-click mo ulit. Yan. Para maging green siya. At hindi nakakainis. Okay? Inventories. You know cost of goods sold, right? Kailangan mo makuha yung cost of goods sold per day and multiply it to the inventory days. And that's the inventory balance. Okay, so that's also green. Ba't mali ang coloring ko dito? Okay, so let's try to... So yan na, meron ka ng receivables, inventories, PPE balance. Receivables, inventories, balance. PPE. Yung PPE balance, so compute na natin, right? Connect mo lang sa taas. PPE ending. So yan na yun. Right? It's black because wala naman siyang connection sa ibang sheet. So yan. And from there, you can compute total assets. So huwag mong kalimutang isama yung cash sa sum. No? So you now have total assets. Okay? Next, payables. Ang sabi sa iyo sa payables, cost of goods sold divided by 365 days times 45 days daw. And then don't forget, lagyan to ng mga dollar signs. Then you have payables already, and they should be green. Okay. Okay. Next, bank loans, equity. Mamaya natin yan pupunuan. Retained earnings, nakuha mo na yan sa taas. Okay. And then kunin mo na yung sum ng payables, bank loans, equity, and retained earnings. Okay. So meron ka ng total liabilities. Kung napansin mo, syempre hindi balanced. Bakit hindi balanced? Wala ka pang cash, wala ka pang bank loans, wala ka pang equity. We'll do that afterwards. We'll do the statement of cash flows first. Okay? So after that, we do the statement of cash flows. Net income. So if you remember, this is the indirect method of computing the statement of cash flows. In the indirect method, how do we do it? We start with net income and then we add back non-cash charges. Okay? In this case, non-cash expenses is only depreciation. And then we adjust for changes in working capital. Okay? From there, we compute the operating cash flows. Okay? So let's try to do this or compute for it. Net income. So punta ka sa income statement. Andun ang net income mo. Okay. Depreciation. Punta ka sa income statement. Andun ang depreciation mo. Okay. Changes in receivables. Changes in receivables, if there is an increase in receivables or inventory, ang impact niyan sa cash flow is a reduction. An increase in a current asset, ang impact sa statement of cash flow calculation is a deduction to net income. If there's an increase of a current liability, ang impact niyan to the statement of cash flows is an addition to net income. No? So therefore here, changes in receivables, how do you compute this? Okay. So, ano ang changes in receivables in 2021? From 0, no, to 0, right? Yun ang change in receivables. Okay, let's try to compute the next few years. Okay, here. In this year, there was an increase in receivables from year 2023 to 2024, from 0 to 20.8. If you simply get the difference, okay, ang lalabas dito sa formula mo, positive. right? However, it should not be an addition to net income. It should be a deduction to net income so that you can get the appropriate state operating cash flows. So how do you model it? Talagyan mo ng negative sa start. Yung gusto mong makuha is kung mas malaki ito kaysa dito, what we want is the negative of that number. So, kaya ganyan natin siya minomodel. Okay? 20.8 kasi there's an increase in receivables. Let's repeat it. Increase in receivables and an increase is considered as a negative adjustment to the calculation of operating cash flows. Ito naman from 20.8 to 24.1, negative ulit. No? So that's how we will compute for it. Okay? Let's finish inventory. Ganun din ang inventory kasi current asset din naman yun. So versus the previous year. Okay, and then yan. Okay? Changes in AP. Pag AP, accounts payable. So therefore, an increase is an addition. So let's analyze this. From 2023 to 2024, there's an increase of 1.7. Ang gusto nating modeling impact is that it's an addition. So no adjustment needed. Tama ang na-reflect natin using this formula. Okay. And then you can sum it all up, and that's the operating cash flows for the year. Okay, and then you can copy it until the end of 2025. So that's your operating cash flows for every year. Next, the next set of cash flows is capital expenditures or investing cash flows. Saan natin yan i-connect? Eh, di dun sa pinakataas. We already provided here the total capex disbursement, right? And it is a cash outflow. So negative yan dapat. Okay. And the sum, isa lang naman siya. So equal lang siya doon. Lastly, financing cash flows. 0, 0, 0 pa yan. Pero gawin na natin yung sum. Okay, kasi hindi pa natin siya ginagalaw. Okay. Pero lagay mo na yung sum para madali na later. How much is the net cash flows? The net cash flows is operating cash flow plus investing cash flows plus financing cash flows. Pwede mo na yung i-add together. Okay. Cash beginning for the first year is 0. So when you add the two, negative ang cash ending balance. The cash beginning in 2022 is equal to the ending in 2021. And then you can add the two, and that's the cash ending for 2022. So you can copy both items up to the end. Yeah. Okay. With this, meron ka ng cash ending, you can now connect it to the cash balance here. Okay. So, na-connect mo na yung balance sheet cash balance to the income statement cash balance. And from here, you should note, if you did everything correctly, you should note that your balance sheet is balanced. Even if you do not have equity transactions and debt transactions. Okay? So, ayan, confident ka na, okay. Tama ang balance sheet ko ngayon. Okay? Now, the last step is funding analysis. So first, what I want to do is to determine the cash balance as reference. So dito may line na cash balance. Right? Oops. Punta tayo sa pinaka-start. May line na cash balance. Gusto ko siyang i-connect dito para lang I know or I see how much cash balance should I finance. Okay? So sabi dito, negative ang cash balance kasi wala pang debt and equity. Right? We still have to pay for it using debt and equity. Right? So ngayon, dito na tayo pwedeng mag-experiment. Okay? what we want to do is to determine the amount of equity and amount of debt that we need to infuse into the business. However, itong mga cells na to, hindi pa to connected dun sa taas. So we need to connect it. Okay? Para makita natin yung tamang cash balance. Okay? Let's connect them one by one. Equity. Okay? Let me add, so equity here, itong mga cells na to, ito yung equity for every year. Okay? So saan ito nakakonect? Nakakonect sa dito. Sa equity sa balance sheet. Okay? So dyan natin makukuha yung equity balance for every year until 2025. Okay? Let's look at this. Meron akong magic na ginawa. If you look at my formula here, anong ginawa ko? Sum, and then G86, pero merong dollar signs, G86 without the dollar signs. What does that mean? It means ayokong gumalaw ito. Yung first part, ayokong gumalaw. Okay? This portion, ayokong gumalaw. Pero this portion, okay lang sa akin gumalaw. Kasi pag pinagalaw ko siya, from here, magiging G8 to H8 na siya. So I'm summing year 1 and year 2. Pag nandito na siya, G86 to J86 na siya, which is the sum of equity from year 1 to year 4. So it's just a financial modeling shortcut. Okay, or Excel shortcut. Para na-add ko yung cumulative up to 2025. So that's the first thing that we need to connect. The second thing that we need to connect is debt. Okay? So, okay, saan pa ang connection ng equity? Okay, may connection din siya dito sa statement of cash flow sa equity infusion. Okay? So you need to connect it. Okay? Yung equity infusion, connected siya dito dapat for every year. Okay? Kasi dito mo ilalagay kung magkano ang equity for each year. Okay? So let's connect it there. Ang objective natin is we want to make the model dynamic. Na pag change ko yung debt and equity balances, malalaman ko na agad kung yung cash balance ko tama ba or hindi. Okay? Next, non-drawdowns. Okay, let's analyze na. Okay? Let's put hypothetical numbers first. So, i-ignore mo muna ito. I-ignore nyo muna yung cash balance kasi hindi pa yan tama. Okay, ignore. So, pag meron kang debt na say 600, okay? Right? Ang sabi, pwede kang umutang within the next 3 years and then 10 years ang iyong debt repayment. So, kung umutang ka ng say 600 and, kunyari, sorry, 700 lang pala. So, 350 and 350 for example. Ang repayment period mo is 10 years. 10 years. Okay? So 70. For every year, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yan yung annual repayment for every year. So utang ka for the first 3 years. After the first 3 years, magbabayad ka for 10 years. Yun ang yung debt repayment. Okay? So yan. How do we now compute the loans balance? So loans beginning, parang T-account lang. How much did you draw from the loan? How much did you repay from the loan? And then loans beginning plus drawdowns minus ending. Makuha mo na yung loans ending balance. Okay? And then you can compute it. No? And then hanggang sa dulo, dapat ang target mo, ang ending balance is 0 ang loan. Which is correct kasi nabayaran mo na yung fully yung loan at the end of 10 years. So now you can connect this in your balance sheet. Meron ka ng bank loans, right? In 2021, Mako-compute mo na yan by going sa baba. Yan, meron ko ng loans ending. Okay? And you can, pwede mo nang i-connect. So ngayon, yan na. Connected na siya. Right? Okay. Saan pa ang connection ng bank loans? Sa loan drawdowns and infusions. So the loan drawdown is how much? The loan drawdown is, dito mo yan mahanap, drawdowns. Right? And loan drawdowns are inflows. Ang debt repayment, saan mo yan mahanap? Pwede doon rin. Sa the same analysis. Dito rin. Right? In fact, it should be the negative of this number. Okay? So, makukuha mo na yung loan drawdowns and repayments. Okay? Right? So, ngayon, integrated na siya ngayon into your cash flow, in your cash flow calculations. Okay? Now, let's try to analyze. Without the debt, meron kang funding deficit. Okay? According to your financial model, without dividends and without any debt, you have a funding deficit. What's your funding deficit? It could be as much as 1.3 billion. Right? Negative ang cash balance ibig sabihin hindi mapondohan. Right? And eventually, maubos rin naman yan. Darating ka sa point that your cash balance is enough to cover everything. However, meron yung timing issue. So therefore, you need to fund this at the onset. You're told by the bank that you can only borrow 700 million. Right? So dapat, utang ka muna ng 700 million. So how do you do that? Pwede mong gawin one shot. O gusto mo, one shot sa first year. Okay? Right? Hindi ko pala na. Dapat kasama yung first year. One shot sa first year. That could be one approach, right? So kung one shot sa first year, wala na akong ibang pera, kailangan mo nang maglagay ng ng equity, right? However, ang isang korporasyon, hindi naman pwedeng walang equity sa simula. Okay? I mean, for a corporation to be formed, you must have a little bit of equity at the start. So say, for example, 50 million of equity. Okay? Right. So 73, cash balance is 542. So dapat mag-infuse ka na sa year 3. How much are you going to infuse? Halimbawa, infuse tayo ng 600 million. Yan. With this, zero na. Right? Okay. However, you have to understand na hindi pa tapos yung iyong income statement. Right? Anong hindi pa tapos? Wala ka pang interest expense. So you have to consider interest expense. How do we compute interest expense? Okay? Sabi dito, applied to the balance of debt at the start of the year. So whatever is the balance at the start of the year, yun yung may interest. Okay? So balance at the start times the interest rate. 10%. Okay? So you can... Ayan, yan daw ang interest rate at the start of every year. Okay? With that, we can connect it to the income statement here sa taas. No? Because yung interest expense mo wala pa. So, punuan na natin yan. Okay? And then copy until the end. That's your interest expense. So, ngayon, kompleto na lahat. Right? Let's check kung kompleto na lahat. Revenues until net income, kompleto. Right? Ang hindi nilang kompleto, dividendo. Pero usually sa huli talaga yan ginagawa. Okay? You have a cash balance. Is your balance sheet balanced? Yes, it is. Right? It's balanced every year. Okay. And now I can do a proper analysis. Okay. So here, kung kung inutang ko na ng buo, 700, 647 negative. So kailangan ko siguro mag-infuse ng 700 million as equity. Kaso kulang pa rin. Mag-infuse kaya ako ng 20 million. Tapos dito, 30 million. Tapos dito, 10 million. Okay, or siguro lakihan naman natin, 15. Okay, yan. So under this funding scenario, okay, I have to fund 815 debt and 700 million equity. As 815 equity, 700 million debt. Okay? So parang the debt ratio, okay? The debt ratio is almost 46%. Okay? Siyempre kung ako yung may-ari, I don't want to infuse that much, right? As much as possible, gusto kong i-minimize yung aking i-minimize yung equity ko. At the same time, I don't want my equity to be available ASAP. No? Pwedeng in tranches ko siya ibigay. So why don't we do this? Why don't we, say for example, fund this first with equity, 60. Okay? And then saka ako mag-debt. So siguro match natin. Say 350, 350. Okay? Because of that, may 350 pa ako dito. Right? So dito, infuse ako ng 250. Ay, kaso may negative pa. So infuse ako ng 30. Negative pa. Infuse ako ng 30 ulit. Negative pa. Infuse ako ng 20. 740. And from there, positive na lahat yung cash. Okay? What happened? My equity became smaller. 740 na lang ang kailangan ko. Right? Kanina, ang kailangan ko, 815 over versus 700. Right? Bakit umunti yung equity that I need? Okay? Umunti yung equity na kailangan natin. Okay? Umunti yung kailangan nating equity because dinelay natin yung debt. When you delay debt, you also delay the payment of interest. Right? Noong 700 siyang bulto sa umpisa, kumikita na ng interest ang bangko sa year 2 and 3. I'm paying heavy interests already. But if I back-end debt, okay, then nakakatipid ako ng konting interest. Right? And it may require less equity from my end. Okay? So let's assume that this is the optimal cash, optimal funding for the company. Okay, let's assume that this is the optimal equity funding and debt and equity mix. Okay, let's finish na. And let's finish it by computing dividends. Okay, kasi tapos na lahat eh. No, na-compute mo na lahat, balance na yung balance sheet mo. The only thing that's missing is dividends, right? Now, in computing for dividends, there are two things to consider. Okay? The first thing is the target cash balance of the company. The second is the retained earnings balance. Okay? The second one is easier to explain kasi by law, kung walang retained earnings, bawal mag-declare ng dividends. Okay? You can only declare dividends if the retained earnings is positive. Okay? So that's the first rule. The second rule is, of course, the company wants to maintain a certain target cash balance. If the balance is at or below that target cash balance, then dapat wag munang mag-dividends. Okay? Let's try to demonstrate how that dividend decision is being implemented. First, we need to determine two things. These two. We need to compare the cash that can be earmarked for dividends and the retained earnings balance before dividends for the year. We have to compare the two so that we know how much dividends we can distribute. Okay, so for us to be able to get the cash earmarked for dividends, ano ang formula niyan? The formula is the cash balance before dividends minus the target cash balance. No, kung yung cash balance before dividends is higher than the target cash balance, edi meron tayong wiggle room, may elbow room para mag-declare ng dividendo, right? So that's what we want to compute first. So let's try to determine that. How do you get the cash balance before dividends? Edi let's compute cash beginning for the year. No? Cash beginning, punta ka sa statement cash flows, ayun yung cash beginning. Okay. Operating cash flows. Okay. Investing cash flows. And then financing cash flows except dividends. So therefore, kunin mo yung sum ng equity infusion, loan drawdowns, loan repayment, except dividends paid. Okay. And from there, you can get the bank cash balance before dividends. Okay. Let's compute the target cash balance. Ang sabi, ang target cash balance is 180 days ng total OPEX. So let's get total OPEX. Here is total OPEX. How much is it per day? And then multiply it by 180 days. So yan ang target cash balance. Okay? So from there, cash balance before dividends minus target cash balance, ibig sabihin ito yung excess cash na pwede sanang i-declare as dividends. So we can copy it until 2025. Okay? So there. So nako-compute na natin. Next, we compute the retained earnings before dividends for the year. So how do you compute that? Hindi kukunin mo yung ending cash balance, yung beginning cash balance, beginning retained earnings plus net income, pero wag muna yung dividends. Right? Before dividends. So, yun. Okay. From there, how much dividends should you distribute? You can distribute only if first, there's a positive RE. If there is a positive RE, the next thing that you should determine is the excess cash higher or lower than retained earnings? No? Siyempre, titingnan mo muna positive ba yung RE. If positive, what do you do? If positive, you'll check whether excess cash is higher or lower than RE. Bakit? Ang pwede mo lang kunin is the lower of the two. If the RE, for example, is 200 million and the excess cash is 250 million, you cannot declare 250. Why? Because your RE is only 200. So you can only declare up to 200. Kung baliktad naman, if your RE is 250 but your excess cash is 200, you cannot declare 250. Wala kang pera eh. You can only declare 200 kasi yun lang yung physical mong pera. So, you have to think about how you're going to model this. Okay, so you need to first determine if you have positive retained earnings. Okay? So dito sa retained earnings dito, no, lalagyan natin to ng rule. Okay? If this sum is greater than 0, what happens? Okay, it means positive RE. then the number that we'll include here is the sum. Otherwise, if it is negative, this number should be 0. Okay? So that's the first logic that we're going to include here. So here, yung mga 0 dyan, ibig sabihin negative RE. Okay? Let's also provide here, yung cash earmarked for dividends. Let's also provide the same logic. Okay? If the excess cash is greater than 0, okay, then therefore you can declare this much dividends. Otherwise, you should not be declaring dividends. Okay? Right? And then here, yung dividend to distribute is the minimum between the two. Okay? And once that you have this, pwede mo nang i-connect. Saan mo na i-connect? First, you'll connect it in the dividends balance, dividends here. Right? So, meron ka ng annual dividends to calculate. Okay? Right? And then the next is that you need to ensure that your dividends is part of the statement of cash flows. Here, dividends paid. Okay? Yeah. So based on this, dapat balance pa rin yung balance sheet mo. Yeah. So there, I was able to now provide the forecast. So to answer the question of Cocoa Oil Company, how much equity should be provided based on our analysis, 740 million. Seems to be the smallest that we can provide. Okay. Here, I've already computed, ito kasi 0 siya eh. So let me just delete this. I've already provided some of the ratios, no? You can already calculate some of the ratios. Okay? So here, liquidity, quick ratio, cash ratio, and from there you can analyze the forecast. No? Masyado bang maraming receivables? Masyado malaki ang current ratio, it seems. Baka there's a way for us to reduce it. Right? You can also get the profitability ratios, turnover ratios, leverage ratios, and you can do your financial analysis there. Okay? So here, we have already solved the financial model. And hopefully this is something that will be useful to you. I won't put, so, and with this, I hope you're able to replicate this example. Okay, thank you.